Hello everyone, welcome to Smart Investing. I'm Albert, host of the channel, and today this video is going to be about the banking services sector. Today is October 2nd, 2022. It is 6:51 p.m. Markets are closed. So today I only have about 5 stocks for you. Like we always do it, I'm going to start from the bottom all the way to the top. So this video is going to be about fundamentals, technicals, and quants. We're going to just do a quick overview on seeing if these companies are good or if they're bad or if they're okay, pretty neutral. Or if they, even if they're neutral, to see if they need some work. And we'll decide a definite yes or no. And then also, I might also just give a comment on the stock if maybe later on next year the company might improve because they might be decent. They're pretty neutral. Like they're not too bad and not too good. So they just might need a little bit of work. And maybe they have potential. So hopefully I might say no to some of these companies. Not only these, but in future videos and past videos. So, they might just have to be looked at later on to see any improvement that they made over that time. So, first stock up is Fbnc, First Bancorp. So, we're going to see something real quick. Make sure they are in the banking sector because some of them might be in the related sectors. So, as we can see here, looking at the first page, stock is at $36.58. Volume is pretty decent. Market cap already is at 1.31. That's a small cap company. 52-week high and 52-week low. That is a difference of about $18. So that's a pretty decent price range for the year. A little bit above normal ranges, which is usually about $10 range. But it seems pretty good anyways compared to what I've seen before. So PE ratio slightly undervalued. That's what I'm looking at. So they do pay a dividend. Yield, I don't care, but I'm going to highlight it for you guys anyway. Yield is at 2.41. And then obviously positive earnings. Earnings are at 3.23. So they can definitely cover the dividend at 88 cents per share. So obviously this is a yearly payment. So you're looking at 22 cents every 3 months. I don't know what months they pay, but we will go over that. So far, some fundamental and technicals by looking at it, the stock seems okay. So now we're going to go a little bit further on the technicals. So using the 200 EMA for the 5-year, it looks like it's pretty flat. And if we look at 2020, obviously it's gone up. But prior to 2020, it has pretty much seemed flat. So even from the start of the year of 2018, seemed flat about 34, you could say, low 30s, low to mid 30s. And again, now we're still stuck in that same range 5 years later. So it's pretty flat. Stock doesn't have potential on a technical side. So using the technicals as growth, I don't see much potential for it as growth. And maybe I'm wrong, but so far it just doesn't seem like it's going anywhere. This is just a short-term run. So we see from 2021 all the way to about January from 2022. So not even a year. So this was actually about 9 months, give or take. And basically, the range for that 9 months was only about $10, $10 to $12. And that's not too much. Could be better than that. That's pretty average from the $10 to $15 range. So on the technical side, so far it has failed. So let's see if it can pass on the fundamentals and some quants. So we're going to look at the analysis for that. So highest quant rating is, and they're pretty close, so 5.56, 5.76, and 5.60. Highest rating was for growth at 5.76. Second best rating was for income. I kind of disagree with that overall. And so far for growth, I just don't see it. So I do disagree with that. So I already have 2 disagreements with this stock. So far I failed 2 out of the 3. And then I don't even have to look at the fundamentals. So this stock is a no. But we're still going to go over the fundamentals because that's what I still like to do anyway. So real quick, let's see if we have any annual results. Giving it a few seconds, but it's not giving me anything. So we're going to move on to the next pieces of information. So you have here cash flow and the balance sheet. Balance sheet is pretty average, like other balance sheet is similar to other banking stocks with high debt. Yeah. Hey, Araya. Cash flow is at 138. Sorry. Want to see if they have positive cash flow. Yeah. Want to see something? So they have negative cash flow. The dividend, we're going to see something. So they are paying rising dividends. I don't see them as a growth stock or a income stock. So they had splits in the past years. And you can see in 2022, they paid 22 cents. In 2021, she's coming later, okay? 20 cents in 2021. And then in 2020, they paid 18 cents. And prior to that, 12 cents. They are doing a decent job giving the rising dividends, but overall, again, you can find better companies than this. So we're going to move on to the next one. So far that was a fail. Next stock up is HONE, Harbor One Bancorp. So 5-year technical. And we're going to look at the market cap and the 52-week high and low. So $673 million market cap company. They still have work to do. Price is at 13.42. So we're still going to see the 52-week high and low. They haven't even broke highs or lows. That's horrible for a stock. Even if you have like a million volume, I wouldn't even count this. I mean, just this alone is just like a really big no-no. You only have like a $2 range within the year. That's just pretty awful. And a PE of 14, so it is fairly valued. It's just flat. It hasn't gone anywhere. So nobody's really buying or selling this stock, and that's pretty much it. So the technicals have failed, and then we're gonna see the quant ratings for this. So momentum is at 7.42. So for the momentum, we're looking at the technical chart. I don't see any momentum. It's not really gaining much. Again, it's gonna. I think it failed for those numbers for the quants. So I'm gonna say no as well for the quants, and then we're gonna look at some continuation for some more fundamentals. So we have here the debt. Let's see if this thing loads. So it doesn't seem like it's loading any annual results. So we're just going to continue for the income statement. Income statement is 58 million. So it has raised the net income, revenue, operating income. It's not giving me anything. Balance sheet. So it is at 4.55 billion for 2021 and 3.87 in 2021 for the debt. So now, yeah. So 85% in debt. That's not quite good, but again, when it comes to the banking sector, it's pretty typical. Now, pretty much we just want to see cash flow from the banking sector. So let's see here. So they're positive in cash flow. So they're left over with pretty much 8 million. So then, aside from all that, give me 1 second. So aside from all that, where was I? So even though they're positive in cash flow, they are positive in earnings as well, as you can see. That's not bad for a $673 million company. I think for the momentum, if they stop paying dividends, I think they would do so much better. We're still going to see the dividend history. So we can see in 2020, they started to pay dividends of 3 cents. And then in 2021, started to pay 5 cents. And then if you notice, they only made 3 payments, actually. So that's kind of weird. Usually it's 4 payments, but they're only making 3. I don't see how and why or what the point of that is. So anyhow, we have here 3 payments in 2020, 3 payments in 2021, and so far 3 payments in 2022. Again, we have 3 more months left, but it doesn't seem pretty consistent as a dividend payer. So it almost seems like they're missing a payment. I just don't see any value in this at all. No kind of quant rating, so I'm gonna say it failed the test for all 3 types of analysis for fundamentals, technicals, and quants. So moving on to the next one, AFBI, Affinity Bank shares. So with Affinity Bank shares, market cap is at 97 million. 52-week high and low. Looks pretty awful. Earnings per share is at 0.98, so it's not too bad. I like the fact that they're not paying a dividend. It can allow them to grow. That's definitely the right move. So I wouldn't expect them to even pay special dividends. So they just need to gain more popularity. I still want to see when this stock has released. So it looks like it has released in 2021, and they have stayed flat for 2022. They haven't lost much pricing. So they're still holding up, and this seems like a stock to kind of keep your eye on. It's not really good, but it's pretty decent to keep your eye on it. Doesn't seem like it has gone down much. Very volatile. You could see so many spikes here, even in the start of 2022. So you had a small downtrend, went up, then a new low, and then ever since May of 2022, it's been flat. So, yes, all right. Okay. Okay, thank you. In a minute, okay? Wait, okay. So we're gonna see the quant rating. So I'm gonna say yes for technical analysis. It's doing okay compared to other ones. Momentum, I don't agree with the 8.0, but I would say in the 7 range. Give it a 7. Bless you. So it's doing okay. I mean, I like the fact that it's holding up, and it even though it has gone down slightly, it hasn't gone down much. So with the income, obviously they're not paying. That's out of the question. Growth right now is out of the question. We're in a down market, so it's hard to do. So then quality and value, it's hard to give out those numbers because I don't have the proper information with me. But we're going to see what we can get. So in 2021, we have 1.0. Net margins, not giving me anything. The debt is not too bad from 2017 and 2018. Hopefully they can get back to those levels, even the 2019. And then in 2021, they started to get carried away at 84%, and also in 2020 at 90%. So that's not a good look. Net income has gone pretty good for 2020 and 2021. And then revenue, it's not giving me anything. Balance sheet is pretty high. Again, that was an awful move in 2020, even though they got bailed out. And that was a really bad move in 2020. That was actually one of the best years to actually pay down debt. And also in 2021 was one of the best times to pay off debt. So now that's over with. You can see here, look how low that was, and then look how much of a difference that is. So you can see they pretty much grew their assets, but then they also grew their debt as well. So it's just it's pretty tight. It's pretty tight to do that, especially when you're a small company like that. So cash flow, we're gonna see here. They're definitely negative in cash flow. That is not a good look. So I will. Let me see their net income real quick. 7 million. Yeah, even that's not gonna cover their cash flow. So they are cash flow negative. So I don't see how and why they're guesstimating that the quant rating for what was it, momentum, is that high. It would take a lot of volume for that to go up, and then also they will have to reach new highs actually by the end of the year. We only have 3 months left, so I don't see new highs. So I think this is actually a false breakout and a false sense of reality. So if this stock is supposedly, even during a bull market, even if it does eventually, when it does reach highs, it would have to break new highs from the past 5 years. What was the highest from the past 5 years? So, and this obviously this is a new stock, so it would have to pretty much double from its highs. It would have to double its highs just to gain some interest for investors. So as we can see here, the high was like around 15. But 52-week high is giving me 18. So if you would double that, you're looking at about $36 just for it to be considered with some kind of interest, some likability. Because I know during a down market, it's hard to look at companies like these. But if they have negative cash flow, that's really going to determine whether it's positive or negative sentiment. So I'm sure a lot of people are not going to like that stock. So we only have two more. Moving on to the next one, Gsbc, Great Southern Bancorp. So stock is at $57. I like the little uptrend, and it looks like it's still holding up. Decent price compared to other banking stocks. I'm surprised that the market cap is at 703 million, 52-week high and low, a difference of about, let's say, $13. Earnings per share is pretty strong at 5.4. They are paying a dividend of 1.6. So pretty decent stock. They're paying dividends, and looking at the chart, they're doing okay. So they are above their 200 EMA. So about that price in the low 50s. Right now it's in the mid 50s. So that'll be a pretty decent opportunity to get in if needed, or if need be, if that time comes. So we're looking at the Quant Rating. So the technicals I like, and they're pretty good. So quality and momentum. So momentum was the high rating. Second highest rating was quality, 7.41. So for momentum, it just needs way more volume than that. But it is beating the average volume. So this is a very unknown stock. So for their earnings estimates, they're estimating even higher estimates for Q3. And I don't know when that's going to be reported, but I'm sure it will be reported maybe sometime this month or next month. So far the stock seems okay. So we're going to look at the other indicators here. So it looks like they're earning money not from how managers and the board of directors and the management team is doing. It's based more off of the money that is already involved with it. So it looks like they're not creating new ideas. They're using their money and they're putting that to work. So earnings per share, it looks pretty tricky. I mean, from 2017 went up, then went down. Well, it looks pretty slightly went high, then it dropped, then it started to go up again. So then we have net income is pretty tricky. Went up for a few years, went down in 2020, then it went up again. Revenue is not giving me anything. I wish they would fix that already, but that's what I have. Balance sheet obviously needs work, just like other banking companies. Cash flow, so we're going to see if it's positive or negative. So definitely a lot of cash on the sideline. Definitely a positive outlook, and they're beating earnings. And if I had more indicators for their revenue and other info, that would be very helpful. But from what I managed to gather here, this seems like a pretty decent stock. So we see here in 2020, they paid a special dividend. That's pretty cool. But again, I just want to see if they paid a rising dividend. That's the first thing that I see, since they're doing pretty good actually, compared to having cash flows and obviously the net income going up, and they seem to be doing pretty good, this company. So especially with a market cap that low. So we have rising dividends right here. So from 2019, then in 2020 they paid out, and then they didn't make a dividend payment, but they paid a special dividend. Then in 2020, it's still the same payment of 34 cents. So that's still not bad. And the reason I say that is because 2020 was a bad year. It was a surprising year for the first few months, but overall, it turned out to be a good year for a lot of people. Also, 2021. But like I said before, 2020 and 2021, I took a break. I think markets were oversold and overextended, and that's just me. I wasn't involved with the market, so I took like a 2 year hiatus, and now I'm back in. So we can say that it took about 2 years for them to do a raise in 2021, late 2021, the second half of the year, and then also in 2022, that's when they started to do another raise. So basically, it took them 2 years to make the raise, but again, they paid special dividends between those years. So this company seems to be doing okay. So we're gonna look at the quality and momentum. I think the momentum is actually lower, and I actually think the income rating is actually higher. So I disagree with this, and I disagree with this. But for the most part, I think that this company is pretty decent. So they rated a 1 out of 5, 1 to 5 rating. They rated this a 4 overall. And you could say pretty much, if you were to give a point to each category, 1, 2, 3. So I would say passing is a 3. And then to consider it pretty good, it would have to be actually a 4 or 5. 3 would be just average. And obviously 1 and 2 is fail. No, that's not food. Thank you. You hungry? You'll eat soon, okay? So for this company, this is the only company I'm going to say yes to. And we're going to move on to the next one. And this is the last one. Last one is People's Finance Services Corp. So we have here a nice chart. Market cap of 335 million. So we have here a difference of 52-week high and low. We have here a $17 difference. So PE ratio is 7.5. So that's pretty low. Earnings per share is 6.16. Pretty strong earnings. Really low volume. So it's really underrated. Dividend yield is at 3.42. Dividend total return is 1.6. So 40 cents. That's actually not bad. That's actually not bad. So we have here technical analysis. So last 5 years dropped and then went up again, and now it seems to be dropping a little, but it's held up for most of the year. Obviously, because the prices aren't that big, so you're not going to see big drops. The smaller the prices is, the less drops of a range you're going to see. But again, this stock seems okay. So we're going to look at the analysis for the quants. Highest quant rating was 6.75 for quality, 6.65 value, and 6.27 for growth. So we're going to see the quality and value. So for quality, they do have strong earnings, so that's definitely good. And their value is that they're undervalued. So that's definitely a good sign. They ranked this 4-star. Call it 4-star, but 4 bar whatever you want to call it. So a 4 out of 5. So we're going to see what is going to happen with that. So reading off of the financials, let's see if we have any annual estimates. So we do have something. So it looks like they're putting the money to work. Earnings have been growing. Their debt is slightly higher than normal, but it seems like they're doing pretty good. Net income has grown in the last 4 years. Revenue, operating income's not giving me anything. The debt has raised compared to the last 2 years, comparing to the last 3 years before that. So basically from 2017 to 19, they stayed at around 88%. And then in 2020, the start of 2020, that's when they raised their debt 2%, which is higher than the average in their industry. So we're going to see their cash flow. So they do have cash flow. Do have about a difference of 10 mil. So they can cover the dividend. I think the reason they're paying the dividend is to gain value, not really to gain momentum or growth. This is to provide stability to this stock. So I'm going to say yes to this company. I think it's good for a watch list. And that is all I have for you guys. So quick recap to end this. So we have here, okay, so yes to a watch list, yes, and then we have 3 no's. 3 no's. So thank you guys for watching, and I'll see you guys in the next one.